Welcome to CryptoPi, your hub for transforming trading using technical analysis and risk management. For today, I want to discuss two platforms which can help us doing technical analysis. The first one is TradingView and the second one is the app from IntoTheCryptoverse. When we go on to TradingView, what we see here are different financial assets such as S&P 500, Nasdaq, Dow Jones, Japan 225 and so on. You can also see stocks like Nvidia, Apple, crypto, futures, forex, bonds and so on. On TradingView you have multiple options to look into technical details on how others are looking at charts, how they're analyzing, and what decisions are they planning to take for making a trade in future. Now, instead of explaining a lot more details here, I would like to go directly to the full chart view. When you click here, what opens up is a chart as such. I have already added a few things, so maybe I would jump on to the chart with my organized or semi-organized assets which I have added to keep a watch on regular basis. Now, what exactly does the TradingView offer? Let me first maybe hide this image so we can look at the charts more clearly, and the text. Yeah. So what it offers is, the first and foremost is the price action on daily base on various time frames. In this case, I have selected the daily time frame. So what you would see here, let me hide this as well. I will come to this later, what exactly that is. So here are the time frames, and D stands for 1 day. As you can see, this is for 3 days. For week, you can go to minute, and you can go up till seconds as well if you wish to. I suppose for the seconds time frame you have to go for a higher premium membership on TradingView. Alright, coming back to the plots. What you see here, let's take example of this particular bar, or you can say candle. If I keep my cursor here, what you will notice here is this values keep changing. So that's O is open, H is high, L is low, and C is close. Open is what was the price of the asset when the market was open. High is, as the name states, the highest value the asset went during the day or up until that period during the day. And close, low is the lowest value the asset went, and close is the value of the asset when the trading day was closed. Same goes when you click on 3 days. It is the open on the third day, the close on the third day, high and low. Same goes for week and month. And if you see here, the asset here which I'm looking at is Bitcoin. It's one of the cryptocurrencies which almost everyone would have heard of in one place or the other. And the chart here is on the exchange Binance, which is a cryptocurrency exchange. They started trading since August of 2017, and when I select here month, you see that for every month they have a bar plot or a candle plot. You can change different types of plots as you like. Some people prefer to see it with a hollow candle. Some would like a filled ones. I prefer usually the filled candles, and some people prefer just a stick style of bar patterns. I've seen a lot of people also use line chart, and my assumption is that it is mainly for getting a high level view. Usually a line chart is the close of the day or close of the trading time frame. In this case it's month, so probably it's the close of the month, but we can check it. Let's see what it is here. It's 82550 for the month of March. And if I click on candles for the month of March, that is 82550 is the close. You can see it over here on this one. All right, so we know that line chart is indicating the close of the month. Now, moving away from time frame, let's move back to the day time frame so that we can have more bar plots, and perhaps we can look at some tools as well. So on the left side, there are various tools for drawing. So in this case, you can draw a trend line. Let's say you are saying that from here till here, that was a downtrend. You're basically analyzing, okay, from here to here is an uptrend. This definitely helps for understanding or breaking a chart which is kind of complex and trying to find out which patterns or which way the market is going. There are other tools here. Let's say the horizontal line. So I would say, all right, this was the low in the last 3 months. And if I have to understand further, I would say, okay, it broke this particular high, which was the all-time high in this year. So in last 3 days, I guess it was on Wednesday, it broke the all-time high, though it did not close over it. And usually the term "it broke the high" is applicable when you have a bar close above a certain level. In this case, the high went above the all-time high. However, since close was still at the same level, it was not considered as the break of all-time high. Well, one might argue that the all-time high was somewhere here if you consider the close, and then it was broken here. But usually for the hype purposes, it's usually said that the price was at the high, which was the all-time high. Okay. There are a few other really nice tools which are available. One of them, which is Fib retracement. So Fib is the short form for Fibonacci, which I suppose every one of us would have heard in school, this Fibonacci numbers. And it is seen that a lot of traders mark these Fibonacci levels to identify which are the key levels for the price to either come down to or rise up to. This one is not the default view. Let me select here and go to the default template. Okay, it seems like there is no default option at the moment, but doesn't matter. If we look at the tracing, you can trace from one of the highs to one of the lows, and let's extend this. Let's see if it works. So here between these two levels, you see there was quite some consolidation. That means the price didn't boost drastically or price didn't fall, but it stayed between these two levels. And the traders, how they think in this case is that once the price closes, it would be a good time for me to enter a trade. And I would say here one might think that, all right, the price has closed on this point, I would like to enter a long position. Long position is when someone says that I will take the entry for the trade and I'm expecting the price to go higher. There are a few other tools which are also based on Fibonacci, which we can see here are Fib channel. Let's see what Fib channel does. It allows you to create a channel like this. This is not the best example to create a channel, but I can imagine that this one, if it's an uptrend channel, someone might like to trade or analyze the chart based on this channel, on how the price might go up and down. This is a very interesting one. If you look at this particular candle on December 5th, you see that it basically covered from, I think let's make it to the proper one, to the high here. It covered like 4 bands of the Fibonacci channel. That is a very huge volatility which would have happened on December the 5th. I can imagine that if you look into historical data, a lot of people who were trading with leverage might have got liquidated or might have lost a lot of money due to this liquidity grab. When you see such long wicks, for example here or over here on 20th December, other example can be 13th of January and 3rd of February. These are usually the high volatility candles where people often lose a lot of money because their stop loss are hit. Coming to stop loss and risk management, I will discuss that in the next video, because for today I want to mainly focus on different tools which are available. Here, okay, we looked at Fibonacci retracement. There are different patterns. There are Elliott wave impulse patterns. There are ABCD patterns. This, I think, once someone starts looking and studying how to trade, you will come across these terms about different types of wave patterns and what can happen. Let's take one example of Elliott impulse wave pattern. So usually people mark it, that's uptrend, it was a downtrend, 3, 4, and 5. Now, I drew this very random. However, there is some logic behind the actual theory why people would use this wave pattern, even though you could see this kind of patterns anywhere and you can create these patterns in any time frame. I think with Elliott waves, there are certain ratios which people adhere to, that your line 1 is of certain proportion as compared to line from 1 to 2, and your 2 to 3 is in certain proportions with 0 to 1. But this would be some details which one can look into further and see if that is something which one would like to trade with. This one is the projection. This is one of my favorite tools which are available in TradingView. So taking a long position and taking a short position. Now, why do I say this? Now, let's say that our indicator, our technical analysis, doesn't matter which one we are using, tells us that at this point on 10th of October, it tells us that the price of the asset, in this case Bitcoin, is most likely to go upwards henceforth. At the end of the day, so I wait for the price to close and I take a long position. What it shows here is that if I have taken a long position here, I would be able to make a pretty good profit depending upon what my risk is and what my reward is. Now, bear with me about the terms risk and reward. The risk here is the amount which I'm ready to lose, and the reward is the amount which I am ready to close my position given the risk which I have taken. So here what you see is stop at this many points down, so that is 13% down, 13.51% down. So if I take a trade here, I'm ready to risk my entry position to go down by 14%, 13%, 14%. And with respect to how much loss I'm ready to take, the reward which I'm hoping to get is about 40%. This is just an example. We do not have to go much in depth for this one, but For a long position, you can, if you understand what is long, what is short, then you can use this tool pretty directly. Of course, in the next videos where I will be discussing risk management, I will go into further detail on how to calculate the risk based on the capital which is in your portfolio, and how much reward, how to measure a reward given the accuracy of the technical analysis which one is performing on a chart. Of course, there are some drawing tools which helps. For example, here I have rectangle as one of my favorite, and I use them to identify or mark order blocks. So for example, here this green candle, or not green but the red candle, the red candle before the rally. In the theory of order blocks, there are various definitions, but the one which I have understood and which I'm able to see in charts fairly easily is that once there is a pullback, that is a mini downtrend, if there is a rally where the price goes higher very quickly, the red bar or the red candle before the rally begin is the order block. More often than not, when you are trading, it's quite possible that price will come to this point sometime in the future. Now, it doesn't have to be in next 2 days, 3 days. It can also take 6 months, 1 year, or 2 years. That's just an example here. It is also possible that if a particular asset is very strong or very weak, the order block might not be reached at all. The way this is a bullish order block, there are, in the same way, you can plot a bearish order block. Let's say over here, in this case, this is where the downtrend began. This was a slight pull back or pull up, and here would be the order block. Sometimes the TradingView clicks where I do not wish to click. Okay, so the price might come here, and there are few adjustment or approximations to order block. When you would, instead of taking just one candle, you might take the 2 candle to understand whether the price really reaches there, or how much of variability do you wish to add to order block. This type of technical analysis is quite difficult. I've seen lots of traders understanding this and explaining it on various YouTube channels, and when I tried to analyze it, it did work to a certain degree, but to create a system based on the theory of order blocks, there are so many conditions or so many exceptions, it can get very difficult to remember if someone is trading. That's why people say that trading is not for beginners, or trading itself is not an easy task. Otherwise, everyone would be trading and making so many wins. But all right, this thing I would probably address in one of the really future videos. I do not plan to discuss it in one of the next ones, but perhaps one day in the future sessions. Of course, you can have this text which I really like to make some notes. BTC and USD pair will reach 120k this year. Maybe. We don't know. Maybe. Yeah. So of course this is just a silly example, but you can keep your notes on what are your thoughts that if asset would fall to a certain level and you want to enter a position, you want to take or invest in it or get out of the position. Now There are a few other tools which are for measuring. So this one is to measure how much asset has increased, and here you can define the timeline or the time which you want to measure upon. So from November 12th until January 12th, the asset had moved by 61 days, and if you want to measure the difference in the price or gain or the loss, you can see it also here that it moved up by 58 point. Oh, okay, you would not count. So maximum it moved was 58% approximately. There are few very nice things of TradingView. One I would say is the indicators. This kind of indicators, they really help you to not depend on theory which are totally on order blocks or raw data. Although many traders would argue that trading based on the price action is the best way to trade, which I agree to a certain degree, but it is very difficult to trade based on price action. But instead, what you can do is you can approximate the price action. You can define functions around the price action, which will allow you to understand where the trend is going. And if you have a good risk management strategy, you can combine these two features and still preserve your portfolio from going negative or losing completely, and make maybe small gains and not the huge gains like a trader who is using price action directly. Let's take one of the simplest one is moving average. So here there is a indicator multi-moving average with forecast. Let's see what this one pops up. Yeah, so in this one it's a moving average, and there are 5 moving average which are plotted. All of them, they compute exponential moving average of the price action. The details of this we can look into it further, but to give a simple example, the value of this moving average is usually calculated based on how many bars you would go backwards, take the average of it, and that would be a simple moving average. And if you apply an exponential function to the simple moving average value, you would get an exponential moving average. In this case, the red one, you see here EMA 10 applied on close. So it takes the close of the last 10 bars and then averages it, applies the exponential moving average. Perhaps it might be exponential and then taking the average. You would have to look into the actual code of it and actual code of TradingView, how they are computing exponential moving average. But that is the gist of it. And you can define on how far behind you want to look into. So one is this one, the red one, is looking just 10 bars behind. The one which is orange, 20 bars, 50 bars, 100 and 200 bars. It is quite common to use 50, 100 and 200 moving average for understanding long-term trends. If someone is a trader who enters a position and leaves a position within a day or within, let's say, a couple of days, so within a week, they might use 200 moving average as well, but probably they will be using very different indicators than just moving average, because then you wish to enter the trade, take the profit or take the loss and get out of the position fairly quickly. When someone is investing for long term, then it's good to look at the moving averages on higher time frame. Even on a day time frame, I would argue that it is too small. The best is to look at either 3-day or a week. Right. let's hide this moving average for the moment. Yeah. The other thing which TradingView offers is adding alerts. So here, let's say my analysis tells me that at one point before Bitcoin shooting up very high, it might come back to 104K. I would say I would right click here and say add alert on 104K. So once the price will come at this level, then it will give me an alert for that. So the price, when it comes down to this level, it will give me an alert. Now, alright, for the moment, let's delete this one. Yeah. What else does TradingView offer? What I really like is, if someone is interested in programming, you can create your own indicators. You can start writing a code and see if you can find a good strategy which you can use for trading. The moving average, there are some open source codes which you would click here, you would find. Of course, you would have to learn their language, Pinescript, and it takes a while to understand programming languages, but there are lots of indicators which are available by the community, which you can explore and see which one fits to your style, fits to your asset, and then decide on building a strategy based on indicators. I will also discuss this about building a strategy or using different indicators in future, and perhaps it might be useful for you. Now, that was a very brief, or not that brief, introduction about TradingView. One more tool which I mentioned that I want to talk about is the app by YTC. It is by Benjamin Cohen. He has a YouTube channel, a very good one. I got to learn a lot from him, from his videos. And I would say if you are entering investing in crypto or thinking about understanding the fundamentals of the market of the cryptocurrency and how macroeconomic factors affect various financial assets, it's a very good and very neutral channel. He puts forward his points about uptrend or downtrend, and he gives his analysis towards it. On his app, on this IntoTheCryptoverse app, there are various charts which you would not find on TradingView, and I find them very useful to understand the high level trends. For example, here the logarithmic regression for Bitcoin, for Ethereum, or the fair value logarithmic regression. Then what were the monthly returns, what was the ROI, and how long a particular asset stays in an oversold or overbought risk level. It's pretty interesting to see a chart from this kind of technical understanding. Supply in profit or loss, usually when you have the percentage loss and percentage of supply in profit, when they are very close to each other, when they intersect, it usually has indicated the bottom of the Bitcoin. Here I applied a 30-day moving average to the chart, and we see that during this period we had bottom of Bitcoin in 2019, and here they were very close in 2023, and here as well the chart gives a pretty reasonable time period where the bottom was there. Of course, a lot of the data which is used in this chart is not from the IntoTheCryptoverse. but what I like here is that there are various sources which you can see them in one place. Alright, I think that would be end of this video, and I would be happy if you can support my channel, share your comments, and see you in the next one. Thank you.